Many of you, and yeah, myself included, probably kicked off your trading journey, endlessly chasing that perfect system.
Oh yeah, the magic bullet.
Exactly, the one that just works, that secret indicator, the infallible setup, maybe even, I don't know, some mystical algorithm.
We've all been there.
We have. And look, discovering an edge is absolutely essential. I mean, it's your entry ticket to the whole game.
It gets you in the door.
But here's the kicker. It's just that, an entry ticket. What truly makes you profitable, and maybe even more importantly, keeps you profitable, well, that's a completely different path. It's a journey really best understood as a trader profitability ladder. And this isn't just some abstract theory we dreamed up.
No, not at all.
It's based on patterns we've seen again and again in serious trading communities, even inside professional prop firms. They classify traders into these really distinct tiers.
Yeah, there are definite stages people go through.
So, our mission for this deep dive, we're going to break down this ladder rung by critical rung. We're going to pull back the curtain on the specific skills, the mindset shifts, and, crucially, the tools you need at each stage to actually evolve technically, mentally, emotionally, and, yeah, financially, too.
Sounds good. Let's do it.
So, with that framework in mind, what does this ladder actually look like for us as traders? We're talking about this powerful idea. Trading success isn't just a straight line, it's a ladder.
Right.
And each rung absolutely demands that you evolve, in every aspect of your trading self. We can broadly classify traders into these tiers. And okay, maybe they aren't super rigid categories, but they really do highlight the typical paths and the challenges we see.
Yeah, absolutely. And when you look at the landscape, the vast majority, we're probably talking somewhere between 80% and 90% of traders are kind of stuck right at the bottom.
80 to 90%, wow.
It's huge. They generally have no real repeatable edge, no consistency at all, and the typical outcome. It's just a painful cycle of losses, often leading straight to burnout.
That's where most people start, right? Maybe gambling a bit, or just copying someone else without really getting it.
Exactly. Chasing hot tips, jumping from one shiny strategy to the next.
Yeah.
It's a tough spot.
Okay, so moving up from that, what's next?
Moving up, you find the next group, maybe the top 10% to 20%. Now, these traders, they often have an incomplete skill stack.
Incomplete. Okay.
They might show flashes of brilliance, hit a few good trades, maybe even have a winning week or month. But the typical outcome here is basically breaking even over time, or just a slow, really frustrating grind downwards of their capital.
So they're trying, they're learning, but something's missing for consistency.
Precisely. Something fundamental just isn't clicking often enough.
Right. And then
we get to the top 5% to 10%. Now, at this stage, a genuine edge is actually present. They have something that works, statistically over time.
okay, so they have a working strategy.
They do. But their execution might be shaky, or their mindset isn't quite dialed in yet. They might make some modest gains, but it often feels like a constant battle.
And those gains get given back easily.
Often, yeah. They get recycled right back into the market, maybe because of poor risk management or letting fear or greed take over.
Okay, that sounds familiar. What's the next level up?
The top 2% to 5%. This is where things start to get really exciting. These traders don't just have an edge. They have a proven edge, and it's coupled with really strong discipline.
Proven edge, strong discipline. Got it.
Yeah. They're consistently generating, a livable income from trading. And you'll often see them hitting those really large, impactful winning months that can significantly boost their financial situation. It's a huge leap from the lower tiers.
That's the goal for many, I imagine.
Yeah.
A livable income, big months possible.
Absolutely. And then finally, right at the very top, the top 1%.
The peak.
The peak. These are the folks who've achieved true mastery across the board. Execution, mindset, and crucially for the long haul, capital scaling. Their typical outcome isn't just good months, it's consistently high income year after year. They've built a genuinely sustainable long-term career.
That breakdown is fascinating. Especially when you mention that top 5% category. It sounds like they're making money consistently, which, let's be honest, is the dream for so many traders starting out.
Right.
So why is there still such a challenge for them? Why isn't that enough? And you touched on this, but why is the size of the capital so important for really staying in those top tiers? It feels a bit counterintuitive, doesn't it?
It really does, but it's such a critical nuance.
Yeah.
And you've hit on something that trips up a lot of talented traders. While it's true, anyone in that top 5% or higher is consistently profitable on a percentage basis.
Which sounds great on paper.
Exactly.
Yeah.
But the real challenge isn't just getting there, it's staying there. Think about it like this.
Yeah.
Say you're trading a $1,000 account and you're making an incredible 100% return per year. Amazing percentage, right?
It's phenomenal.
But what is that really? It's $1,000 in profit for the entire year. Can you emotionally, logistically stick with that strategy long enough for compounding to really kick in, especially when the actual dollar gains barely cover, say, your coffee budget?
Yeah, that pressure, the pressure to make real money now must be intense.
It's immense. And that pressure easily leads to impatience, maybe overtrading, maybe jumping ship from a perfectly good strategy just because the dollar amounts feel small.
Yeah.
That's a huge, huge source of burnout.
Okay, I see that. So contrast that.
Right. Contrast that with someone managing, say, $10 million, even if they generate a more modest 20% annually. Well, the absolute returns are substantial. We're talking $2 million.
Right. Different world.
Totally different world. The stakes are high enough from day one that it naturally fosters this deep focus, this unwavering discipline. The reality is, staying in that top tier is often psychologically easier when your capital gives you significant breathing room.
So good traders can burn out not because the edge fails, but because of the timeline or the environment.
Exactly. Their edge might be perfectly fine, but the timeline to reach their financial goals with smaller capital just doesn't align. Or the mental grind of making small absolute gains just wears them down. It's a very different psychological game.
That really clarifies the whole absolute versus percentage return thing. Okay, so if finding an edge is just the entry ticket, right? And consistency is tied to way more than just percentage returns. What actually moves you up this ladder? Is it just finding a new, better strategy? Because I think that's where a lot of us instinctively look first.
Yeah, that's the default, isn't it? But here's the uncomfortable truth. Changing your strategy generally won't move you up the ladder past a certain point.
Really? Not just finding a better system?
Not usually, no. Each level seems to have its own kind of invisible wall. And those walls, they're not really about needing a new indicator or a different chart setup. They're about internal shifts. It's about you.
Okay, so let's break that down, the transition.
Let's do it. So if you're in that big 80–90% band where you're maybe just reacting, copying, not really having a defined approach, your first most critical task is to build and rigorously test a repeatable edge.
Repeatable, meaning it works over time, not every time.
Exactly. Not every trade, but consistently over a large sample of trades. You need a method. For building that foundation, I always recommend The Art and Science of Technical Analysis by Adam Grimes. It really lays out how to think objectively about markets.
Good recommendation. Okay, so you build an edge. Now you're maybe in the 20% band. What's the next hurdle?
Right, moving from 20% to 10%, you've got an edge, maybe it's okay, but suddenly your biggest risk actually becomes risk itself.
Risk itself. How so?
This is where you see things like massively oversizing positions, going too big, or revenge trading after a loss, trying to make it back quickly, or just having fuzzy, unclear rules for where you get out when you're wrong.
Ah, the self-sabotage stuff.
Totally. These things will absolutely destroy your consistency, even if your actual strategy is decent. You have to master risk management here. Van Tharp's Trade Your Way to Financial Freedom is essential reading for this phase.
And practically, tools.
Practically, you absolutely need a solid position sizing calculator or a really well-thought-out spreadsheet. No more guessing or feeling the size. It has to be mechanical.
Okay. Edge, then risk control. What's next? Pushing from 10% to 5%.
Now, pushing from 10% to 5%. This is subtle. You know what to do. You have rules. You manage risk okay. But your emotions keep interfering.
Like trading off plan, hesitating.
Exactly. You see a setup your plan says to take, but you hesitate out of fear. Or you have a great winning streak, feel invincible, and start overtrading, taking suboptimal setups. Here, it stops being about adding more rules. It's about building unbreakable habits.
Habits. Interesting distinction.
It is. Brett Steenbarger's The Daily Trading Coach is fantastic for this. It helps you understand and manage your trading psychology day by day. And tool-wise, a really good trade journal is key. Something like TraderView or even a well-structured Notion setup works. We're even seeing great results with things like audio journaling, coupled with AI analysis to spot those behavioral patterns.
Audio journaling. Fascinating. Okay, 5% to 2%. This sounds serious.
It is. This jump from 5% to 2% is truly where we often talk about the war within. It really kicks into high gear. Your primary enemy now is tilt.
Tilt. The emotional spiral.
Yeah, that destructive emotional spiral. You abandon your plan after a few wins or losses. You start chasing trades. You let your ego drive decisions, maybe trying to prove the market wrong. This stage demands immense emotional discipline and, crucially, detachment from the outcome of any single trade.
The classic book for this.
Has to be Mark Douglas's Trading in the Zone. It's the Bible for mastering this inner game. And practically, you need systems to actively monitor and track your own tilt, understand its forms, know your triggers. It's all about building that self-awareness under fire.
Okay, almost there. The final leap. 2% to the top 1%.
Right, the leap from 2% and 1%. And honestly, this is where many traders who've come so far actually quit. Not because their edge suddenly fails them.
But because of the pressure.
Exactly. The psychological burden becomes immense. It's not just about discipline with small sums anymore. It's a pure mental game of scaling. Can you actually execute your plan when trading significantly larger size without cracking? Can you handle the drawdowns when it's real, potentially life-altering money on the line?
That sounds intense. Resources.
Jared Tendler's Tradings. The mental game of trading is invaluable here. It specifically addresses these high-stakes psychological hurdles. And for those leaning systematic at this level, managing size efficiently often means tools like Backtrader and Python, maybe using TradingView webhooks for automation, or even investing in custom development or professional services becomes critical.
That's a really clear progression of challenges. It really does raise that question, though. As traders go through this, we hear so much about systematic versus discretionary trading. Where does that decision point, that sort of fork in the road, really fit into this ladder you've laid out? And what are the unique battles on each path?
Yes, the fork in the road. Good question. It typically shows up somewhere around that transition between the 5% and 2% tiers. A trader gets serious, their edge is proven, but the execution or the emotional roller coaster is still a challenge. And they face a pivotal decision.
Automate it or master it myself?
Pretty much. Yeah. Do I try to automate my edge to remove my emotional interference as much as possible? Or do I double down on mastering myself to execute discretionarily, even under the most intense pressure? Both paths are totally valid. Both can be incredibly profitable, but yeah, they come with very different sets of challenges. Unique battles, as you said.
Okay, so what does the systematic path look like? What are they fighting?
So systematic traders, they choose automation, often hoping to sidestep human emotion. But they trade that battle for others. They have to fight hidden risks that are just as insidious. Things like model overfitting.
Where it worked great on past data, but fails now.
Exactly. It's curve fit.
Yeah.
Or regime changes, the market dynamics fundamentally shift, and suddenly your previously great system just stops working.
Yeah.
There are also statistical blind spots in backtesting that only bite you in live trading. And here's the key thing. Automation might remove execution errors, but it doesn't remove the human element entirely.
How so?
Well, sticking with your automated system during a long, painful drawdown can be just as psychologically brutal as discretionary trading. Every instinct might scream at you to intervene, to tweak it, to turn it off. That adherence takes immense discipline, too.
Right. And their tools, you mentioned some.
Yeah, their tool stack often involves building things themselves using Python with frameworks like Backtrader, or maybe using TradingView alerts connected to webhooks for semi-automation. For more complex stuff or optimization, sometimes professional automation services come into play. But it's definitely not always just plug and play. It can get quite complex.
Okay, and the other path, the discretionary trader, what's their main fight?
Discretionary traders, well, they battle themselves directly and constantly. All the classic nemesis: fear, greed, impatience, impulsiveness, mental fatigue, overconfidence, especially when the stakes get higher with bigger size or after a string of losses.
So mastery for them is about self-awareness.
Real-time self-awareness and resilience. It's about knowing your psychological state as it's happening and having the mental fortitude to stick to your plan despite the internal noise and external market chaos. It's an intense, ongoing internal battle.
So it really sounds like there's no easy path out.
Definitely not. You just kind of choose which monster you're more equipped or perhaps more willing to face and ultimately conquer.
That's incredibly insightful, and I've definitely seen that. People know the strategy intellectually, but the doing of it consistently, especially when things get tough, that's where it falls apart for so many. So if, like you said, many traders kind of know what they should be doing, why do most stay stuck? What makes that 10 to 20% band so difficult to break free from? It sounds like a trap.
It really can feel like one. And it's often because they have just enough knowledge to be dangerous, but without the robust internal systems needed to actually leverage that knowledge effectively.
So they have some edge, maybe.
Often, yeah. Traders in this 10-20% band frequently do have a semi-working edge. They might show those moments of brilliance we talked about, hit some great trades, maybe even get funded by a prop firm.
Which can feel like validation, right?
Exactly.
Yeah.
Paradoxically, getting funded can give them this false sense of security, like they've made it. But despite these flashes, they still consistently lose money over the long run.
Why? What are they still doing wrong?
Well, typically they still break their own rules under pressure. They still chase losses after a bad run. They scale up their position size based on emotion, feeling confident instead of rational analysis. Or, and this is a big one, they spend hours reviewing charts trying to find a better setup instead of reviewing their own behavior and biases that led to the mistakes.
Fixing the strategy instead of fixing themselves.
Precisely. They're convinced it's the market. Or they just need that one magical indicator tweak instead of looking inward. And that band feels so frustratingly close to consistent profitability.
Which makes you grind harder.
Yeah. You think more hustle, more screen time is the answer. But, like we've been discussing, the real solution usually isn't more hustle. It's that deep inner rewiring. It's a fundamental shift in focusing on self-mastery.
That makes total sense. It's about identifying the real battleground, which is usually internal. Okay, so wrapping this up, what does this all mean for you, the trader listening right now? How do we sum up this whole journey up the trader profitability ladder?
I think the biggest takeaway really is this. Trading success isn't some destination you just arrive at one day. It's actually a continuous series of transformations, both external in your process and internal in your mindset.
Can you break down those transformations again quickly?
Sure. Having an edge, that just gets you in the game. Without it, you're basically gambling.
Right. Step one.
Then risk control. That's what keeps you alive. Think of it like the oxygen mask for your trading career lets you survive the inevitable drawdowns.
Crucial.
Then discipline. That's what actually makes you profitable. It turns that edge into real, tangible results consistently.
Makes sense.
Next, emotional control. That's what makes you consistent over the long haul. It smooths out the psychological bumps, keeps you executing your plan, even when the market feels chaotic or scary.
The consistency engine.
You could say that. And finally, scaling. But scaling done right, thoughtfully, methodically, with that internal mastery firmly in place, that's what can ultimately set you free. That's how you turn a good strategy into potentially life-changing income.
And the core message.
The core message really is you don't just need better trades, you need better systems.
Yeah.
Both the external ones, your rules, your process, and maybe even more critically, the internal systems within your own mind.
And the ultimate challenge.
The real challenge, the thing that truly separates that top 1% from almost everyone else, isn't just knowing what to do. It's being able to do it again and again and again. Without friction, without fear hijacking you, and without fail, no matter what the market throws at you.
That's powerful. We've covered a lot of specific book and tool recommendations for each stage of this ladder, which I really hope you listening find valuable.
Yeah, definitely check those out. They align with the specific challenges at each level.
Absolutely. So as we wrap up this deep dive, I just want to leave you with a final thought to chew on. If this path to sustained profitability truly is about inner rewiring, about building better internal and external systems, not just finding better trades, then take an honest moment right now. Consider how much of your current trading effort, your time, your energy is focused on fixing your strategy versus truly understanding and mastering your own mind and your own behavior when the pressure is on. What single internal system, maybe just one thing, will you commit to focus on improving this week? Because that is likely where the real leverage for growth lies.
Great question to end on.
We truly hope this deep dive into the trader profitability ladder has given you some powerful insights and maybe some concrete actionable steps for your own trading journey. If you love this content, found it valuable, please make sure you click like on this video and subscribe to our channel. It really helps us out.
Yeah, we appreciate the support.
Till next time, happy trading. Stay sharp and stay centered.